dragged down by losses in the consumer goods sector. Akinola Jones, partner at Aella Capital, joins us to discuss markets midweek. Thank you so much, Akinola, for taking the time out to join us. Now let's take it. We've seen a bit of a lull in the market in the last couple of sessions. Yes, there's been buying, but appetite for stocks has been pretty low. Why is that? I mean, what's the average investor thinking? Is it, well, let's just keep taking profit? Are we waiting for some major market catalysts or some major market moving news to drive this market?
A lot of the investors in this market, at least the retail investors, are very dividend focused. So I think that's where what their core lies in. I think a lot of the institutional investors are just trying to see overall where the economy is going to go. You know, there's a lot of fiscal pressures that the country is facing now that is actually even affecting the markets. I think for a lot of the businesses we have in this market, like a lot of the clients we deal with, if you look at the operational costs, it is extremely high. Like, honestly, if you pulled out the operational cost for some of these consumer businesses and most of the businesses, I run my diesel about 18 out of 24 hours a day.
But sometimes, you know, when I have CEOs of these companies, as you know, we're still in the earnings season, and, you know, we keep asking them, yes, we know the business environment is still very harsh, you know, to a large extent, but many of them tell us, yes, but we are managing costs. They keep saying we're managing costs, so that helps us for the consumer goods. We're able to absorb the extra costs and not pass it down onto the consumer, so we don't see a drop in volumes because of cost, because of the competition.
And then you have to think about the high cost of capital. So even if you're managing your operating costs, you're still, okay, you go down the line items and you still have your high cost of capital. Your interest rates are insane. So by the time you pay those costs, you're paying the high cost of capital. Businesses are running, they can't handle it. It's a very tough operating environment for any business in Nigeria. I think apart from certain businesses in oil and gas and maybe financial services where you can charge a certain level of interest to hedge your bets, you know, it's an extremely tough environment, and the government and the NSE needs to do a lot more to encourage companies to come into the market to boost this exchange.
But what would you have the NSE do? I mean, if you think about the fact, I mean, where we are right now, you know, our fiscal position, I mean, I'm sure you've been following the news with the finance minister talking about the budget, talking about the fact, and we're going to talk about that in the course of the program, how much we're borrowing to pay salaries and pay overheads, and then, of course, what we're going to spend, what we plan to spend for capital expenditure. And at the end of the day, of course, you know, they're all interlinked to ensure that the economy is moving, that there are jobs, there's construction and in infrastructure. But all of that doesn't seem to be very exciting, very encouraging right now if you take a look at the numbers. And, you know, tying it back to the earnings, what earnings tells us about, you just mentioned, I mean, the cost of running a business and all of that. So it's just a whole cocktail of not very encouraging.
Let's think about it. The profitable companies are not listed. The Etisalats of the world, the MTNs of the world, they're not listed. They're not on an exchange.
And they'll give you good reason why they want to be listed.
And they will, but and even the power companies need to come on board. We need to get the public.
Yeah, but for the power company, that takes a process. We're not there yet. We're still trying to get the discos to give us power first of all, and then we can talk about them being profitable and coming to list.
They need capital. They need capital, and you go to the capital markets. You go to raise capital, and they need capital. They're complaining every day that they don't have enough capital to fund their project. You know, we don't have enough capital here, there to fund these projects. You have to give people a chance to buy into the lucrative projects. You can't only have us buy into the companies that are not exciting or that are not, you have to let us buy into the juicy products too.
Juicy project. Let's talk about the other side of the coin. Those companies that are doing well, regardless on the NSE, that are profitable, that investors, still keep investors happy. Dangote Cement. What other stocks can we point to? I mean, it's not all bad.
No, even on the consumer side, I was looking at Vitafoam. They did well. They were flat, but PBT, they were up 15.4%, and they paid dividends to their shareholders, and they have very good fundamentals. They're improving on the technology aspect of things. So even for companies that are not necessarily doing well, you need to innovate. You need to try and find ways to innovate. You need to bring in some technology or something to make your reduce your cost structure and help run your business more efficiently.
Make your services more attractive and not pass on unnecessary costs to investors.
To the final consumer with the inflation rates again and things going the way they are. The final consumer is feeling a very strong pinch.
Now we're in the second quarter of this market. What kind of investing strategies does an investor? Let's say I'm an investor. What kind of strategies do I need right now to maneuver and navigate this market? Look at cherry picking companies. What companies should I begin to cherry pick at this time for best returns?
Cautious optimism, but I would still look at some of the financial services names. I think the GTs and the Zeniths are very strong. The banks are still very strong. I think the treasury departments are strong. I think they hedge forex very well, and they get good returns on their trading in the Treasury's department. I think GT is very strong with its operational cost structure. I think they're very innovative too. I think some of the consumer businesses are trying, but the economy as a whole
back to
is affecting them.
But are there? I mean, we talk about the fact that we always talk about banks for good reason. They're the most liquid, the most traded in terms of volume and all of that. But are there growth companies within this NSE that investors can, if you will, grow with? Either penny stocks, mid-cap stocks. Yes, the company is not so popular, but if you look at the numbers, look at the track record from the numbers, they're not doing too bad. So perhaps I can, You need
to do your research. So you literally need to go in and...
So no names come to mind for you?
I might say an off-point stock like an FTN Cocoa that's trading at 50 kobo, that's trading like at flat. But you look at the potential of that kind of stock. You look at the backward integration capabilities that kind of stock can offer, and you look at if investors actually came in and bought into that kind of stock, and people actually took their time to understand that business and grow that business and raise the right amount of capital. It's the kind of play that you can make the kind of returns that we talk about, but it has to be cautious, patient capital, and it has to be cautious optimism. So it actually takes work. It's not all about the quick return stocks. You actually have to look at some businesses very deeply, look at how capital can be injected into those businesses. And this is just coming from an advisory standpoint. Cool.
All right, hold your thoughts for us. You're going to be with us for the second part of the show. We're going to be talking about the budget and, of course, all that has been making the rounds, looking at how soon the budget is going. We're expecting President Jonathan to assent on the 2015 budget soon. We'll take a break at this point and we'll continue with that. Nigeria has already borrowed more than half the amount it budgeted for the full year as it struggles to deal with lower income from oil. Finance Minister Ngozi Okonjo-Iweala says Africa's biggest economy is facing a, quote, difficult cash crunch, spelling bad news for the incoming government of President-elect Muhammadu Buhari. So the big question is Nigeria broke? I still have in the studio with me Akinola Jones, partner at Aella Capital. Thank you so much, Akinola, for sticking around. Now, you're probably familiar with the budget numbers already. Key projections, 4.49 trillion, recurring 2.6 trillion, capital expenditure somewhere over 722 billion. But I just wanted to bring to your attention a quote, an interview that the finance minister did on April the 16th with CNN's Richard Quest, where she said, quote, if we are not able to pay salaries to people or meet other obligations, then we can say the country is broke, but we have not got there. Nigeria is not broke. I'm going somewhere now. Then take it back to an interview she did yesterday, press briefing, where she says, out of 882 billion naira, budgetary provision for borrowing, the government has borrowed 473 billion to meet recurrent expenditure, which includes paying salaries and overheads. So obviously, I mean, this has been an ongoing debate. Are we broke? The finance minister has been saying, no, we're not broke. Now we're borrowing to pay salaries. What is your response to that question? Are we broke?
We're definitely at the cusp of being broke, because our entire budget is used to feed civil servants and the politicians. And, these fiscal pressures are getting too heavy on the country. We're not spending money on capital expenditures, which is where we need to be putting it. Instead, it's all going to recurrent expenditure. There's so many states that can't even pay salaries right now. And so this is a major issue. You go from state to state, the states can't pay salaries. And we're not even talking, this is going to all elapse and it's going to explode under the Buhari administration.
So it looks like it's all pointing in one direction now, borrowing. We have to borrow. But then borrowing is something we have already been doing. Exactly. Looking at the numbers from the DMO, right now we're doing somewhere between 18-17, meaning that we're doing more of 87-14 rather, more domestic borrowing than foreign borrowing. But now we're hearing the finance minister saying that okay, we're done with domestic borrowing. It's huge right now, over 1 trillion. We can't, debt servicing and the budget is 943.6 billion. That's almost 1 trillion. So now we're looking outwards, the World Bank, the African Development Bank.
We need to look inwards. I think first things first is...
Inwards domestic borrowing?
No, we need to cut off excessive spending. The subsidy has to be reviewed. Now, the first question I will ask the government is, do you have the political will to remove the subsidy? The question is, the fear people had on the last one is when they remove the subsidies, that the money is not really going to go back into the country. It's not going to go into actually developing this country. But now that I think we, at least to a certain extent, believe in our new leader, that he's somewhat... a trustworthy man and all that, and we believe in the new government to a certain extent, we must go after that subsidy. And oil prices are hovering at least on the lower side.
Akinola, hold that thought.